Hey everyone, Josh here. Today I want to talk about low down payment loans. This could be a 0% down VA loan or something kind of like I saw this week. I think it was from Rocket Mortgage. It was a 1% down conventional loan, which is super low. Now these are great products because they allow you to buy a house with almost no money out of pocket, especially if you can get the seller to cover some of the closing costs. You could literally buy a house with no money. But is this really a good idea? And I can tell you for me, it was not. Back in 2009, I was in the Air Force. I moved to Moody Air Force Base in Valdosta, Georgia. I bought a brand new house. I paid $137,000 for it. Lived there for 3 or 4 years. I got out of the Air Force, moved back to Texas, and I called an agent and I told him, hey, I got to get rid of this house. I'm moving. I got a mortgage due on it and it's got to go. He told me, no way, not going to happen. I would have had to come up with around $20,000 out of pocket. And he said that your best bet's going to be to use it as a rental until the market changes. It either appreciates or you pay it down enough that you can sell it. So I listed it for rent. I got a tenant in there almost immediately. They stayed for about 6 years. They were great tenants, took excellent care of the property. And then I finally sold it and still took a loss on it. I'd paid it down enough I could sell it. I got a little bit of money back, but I did not get what I originally paid for it. So that did not work out well for me. And as much as people like to pretend that things don't happen, they do happen. They could be talking about deaths in the family, divorces, forced job relocations, unemployment, all kinds of things that happen every day. And the last thing I want to happen is to sell you a house and then you come back to me in a year saying you got to get rid of it. I don't want to see that. I want to see you stay there forever. So let's take a look at a house here in Houston that I found. This is going to be over in the Clear Lake area. It is a median price house, $324,900, and this home is also for rent. The rental price on it is listed at $23.50. It's been on the market for 101 days, which tells us that there's not much demand for this house at this price. So we're going to assume let's say we bought this house, 0% down VA loan, and we got to sell it. And we're going to try to sell it for the same price that we bought it for. We're going to find that after we pay all of our closing costs, which is the title insurance, your prorated taxes to your buyer, any broker fees, all the stuff, everybody gets a piece of the pie when you sell a house. So our net amount is going to be $294,588, and that is a $30,000 difference. We are upside down on this house, $30,000, which is not good. We cannot sell it. So let's say if we try to rent it out. We need our mortgage covered. So I put in the purchase price. Navy Fed, they're quoting 6.5% for VA loans. We're going to go with that. I put in the estimated taxes, the insurance, and threw in the HOA. And this is going to be all the costs to cover this house. So our payment on it is going to be $28.39, and remember our rental price, just what it's listed at, $23.50. The actual price may be $2,200. We are going to be minus $500+ a month on this house. So if we rent it out, we're going to get most of it covered, but we're still going to have to come out of pocket to pay the mortgage, which is not good. You may not be able to do that, especially if you have to move somewhere and you have to find yourself somewhere else to live. You don't want to be paying on a house that you're not even living in anymore. So in this case, probably not the best investment. And if we look at this, I may be blocking the screen here. Not sure if you can see it, but it's going to be 2030 before this house is paid down to the amount that we're going to net. 7 years. I don't know of anyone that wants to keep a house they're not living in and paying out of pocket on for 7 years. So to get around this, obviously you could put more money down. Anything is honestly better than nothing if you're looking to keep yourself out of a bad situation. If you know 100% that you're going to live here forever and you're never ever going to move and nothing bad's going to happen, then completely ignore this. But if you are worried about it, something to think about. Another thing you could do is buy a house that already has equity in it. If we could get this one at a 10% discount, we already have equity in the house. Selling it's not going to be as much of a problem. You could also keep cash reserves. Let's say you did have the $30,000. You didn't want to put it in the house, so you could take it and invest it in something else that's going to continue to grow, and it's going to be there if you need it. But that's about it for today. I don't want to scare you out of using these products, and I don't want to tell you not to buy right now. But you do need to do your due diligence and think about every possible scenario just to keep yourself out of trouble. Because again, I don't want to sell you something and then talk to you in 6 months saying you have to sell it again. That's not a pleasant conversation. But if you guys are looking to buy or sell in the Houston area, also work leases and investments, residential land, whatever you want, I got you covered. You can contact me at 832-280-8340, and y'all have a great day.